Good morning. Welcome to Admiral Markets. My name is Chris. Thanks for joining us today in this strategy webinar. We're going to take a look at the Forex market and technical analysis when looking at strategy. Before we dive into that, though, be aware that this webinar is intended for a global audience, but may not be suitable for everyone. To get more information, whether this is suitable for you and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this risk disclaimer and you are aware of the risk involved when trading. Just in case you didn't know, MT4 Supreme Edition has 56 additional features, not only useful for myself, but many others agreed because actually Admiral Markets won the MT4 Best Broker Award. As you might have known, we talked about it last week. So that's very nice. Thank you for your votes. And also, if you are not using Admiral Markets, you might want to consider the platform and the spreads at Admiral Markets. So take a look at the home site, the homepage here, admiralmarkets.com. Alrighty. Yeah, I'm not the pre-selection. The pre-selection of the top 4 was purely through voting, and then the final vote was I'm not sure actually. I don't know, but yeah, there was a final 4 that or final 5 that got pre-selected by votes, and after that, I'm not sure actually. Let's see. Calendar. Nothing major going on. We got some Euro medium news. Draghi is speaking. We got some Fed members that are speaking. Well, nothing. I mean, you got some lighter news and medium news, but nothing very major. Okay. Let's take a look at the heat map. Anything special going on? Pound yen, a big mover. Again, the pound, not untypical, is it? Let's take a look. Pound and odd, and then the yen, the third. All right, so we can take a look at the heat map, also on the Admiral Markets website, and you can see that pound is a big mover. Doesn't necessarily mean pound will be a big mover today, but obviously there's a lot of momentum. There's a good chance that we can get continuation. Pound is often one of the bigger movers. So with that said, now let's go over to the charts. Take a look at the euro dollar. Thank you, Beverly. I would have liked that as well. In fact, Admiral Markets didn't get that education prize, unfortunately. I was hoping for that, to be honest, of course, but that was not in the cards for us. But okay, at least I think there was another award for best ECN broker as well, so that's good. I think 3 in total, which is a nice number. Yes, that's very true, Caitlin. I mean, you might have that with smaller ones, smaller brokers. But the bigger you get, obviously, you're going to have, it just doesn't make sense to do that. I mean, it's a short-term profiteering. It's a short-term kind of way of getting profits. In the long run, though, you're not going to keep customers, obviously, if you do that. So you're gonna shoot yourself in the foot in the long run. So today I wanted to focus on the long-term moving averages. And it's actually nicknamed the tunnel. The tunnel is 144 EMA and 169 EMA close. And I like the tunnel because it's a very interesting kind of moment in the market, in the sense that it could be a great spot for trend continuation, or it could be actually the break spot for a reversal. So we're going to talk a bit about the tunnel in theory and then apply it in practice. I've talked about the long-term moving average already quite often, but now we're going to specifically focus on it. The tunnel is often the target when there's divergence present. So when divergence is there, price will often go back to the tunnel or get close to it. Now, with a single divergence on the lower time frames, that proposition is a bit riskier. The higher time frame, the more likely it will get to the tunnel. With lower time frames, certainly less than an hour, typically you would need double divergence before price gets to the tunnel. All right, that's typical kind of rule of thumb that I use. So tunnels are great moments because, as I said, they're kind of like big talking spots. Let's take a look at a few examples. We got great examples on the euro-dollar 1 hour chart. Here you can see, for instance, how the price raced back to the tunnel. Very quick drop last week, about almost 200 pips. And when it gets to the tunnel, it doesn't have to be right at the tunnel. Don't forget that we're talking about a zone. But once it touches or goes through the tunnel, you're getting into an area where price can get a bounce. In this case, price was going back down to the tunnel, so the bounce would be up. All right. Now, it doesn't have to be, as you can see, pushed through a bit, but that's okay. Anywhere when it touches or goes through it, or even misses it a bit, that's a whole zone that is a bounce. So eventually, you got to look for price action for confirmation. So what I do is typically look for 2 candles in the opposite direction, or a very strong candlestick pattern that confirm that, okay, price is going to stop at the tunnel. Obviously, if you start going long right at the tunnel, you have to live through a pretty strong fall still. Well, I mean, it's not that bad, but it's about 40 pips still before it turns around. So, I don't trade necessarily, sometimes yes, but most of the time not directly at the tunnel. It's not intended like that, in my opinion at least. Unless you get a lot of confluence points at the tunnel, that would be a different case. But only using the tunnel, I wouldn't do that, if you get my point. If you get confluence, obviously it changes the dynamics. So 2 candles, for instance, would be here, bull, bull, right? That would merit a potential long there. Now, this is not, I would consider not a method that is very mechanical. It's not like I always take a trade at the tunnel if there are 2 candles in the opposite direction. I do use a discretionary approach to it, where I look at the overall picture, a higher time frame, a lower time frame, to see, is it desirable to trade in that direction? Do I see enough space? And I don't use it that mechanically that I always, in all time frames, look for that setup. All right. I'm not meaning that. Now, when you have a bounce at the tunnel, you get into a situation where price can either continue with the trend, that would be to the upside. In that case, it would have to break above the 21 band, because what happens is that often when you have price bouncing at the tunnel, the 21 EMA band is already pointed in the opposite direction. So price moved back to support, back to the tunnel, but is facing that resistance because of the band that is already pointed, in this case, to the downside. So you get that squeeze. You see that 21 band coming in and the tunnel flat. So you get the band down, tunnel flat, so you got a squeeze. Price is squeezed at that point. So you're going to get either a break to the upside above the band, or you're going to get a continuation to the downside below the tunnel. Or you could even get a bigger consolidation in which the moving averages will go flat and will be on top of each other. All right, and that will be a range environment. That could be another outcome. All right, so how do we recognize which is going to happen? Well, basically, if price starts to break below a fractal that is nearby the tunnel, often of that is actually the moment where it probably could go break below the tunnel. Let me have the drawing tool here. These fractals right here, for instance, when it breaks through that, that could be a very important moment. The other potential is to break above the band. So let's take a look at this example right here. Here you can see a push to the band, but ultimately failure. Here you see a bounce off the tunnel, right? You see move up, the band becomes resistance and makes one more downside. Then still makes a reverse actually up. And you can see that now breaks fully above the band, stays above the band, and price is staying above the band and then breaks to the upside. So fractals around the tunnel are important. First of all, these fractals here indicating the break to the upside, and here, and trend continuation, and here the break of the fractals indicating the reversal. Also, the bullish angled band right here. Do you see that? Compared to here, it stayed bearish. Very crucial difference as well, because as the moving averages, as the band stays bullish, I wouldn't even necessarily have to wait for the break of these fractals. I could even look for pullbacks in the band because we have them aligned. Here, we never got the moving averages to go back to bullish. The difference between here and here, there is a difference. Now, both actually caused price, in both cases, price caused the moving averages to go bullish. Can anyone see the difference between those two? And by the way, thank you, Malcolm, I didn't see your congrats, so appreciate that. Caitlin says the slope. Anyone else? Any other ideas? So we got four ideas, in fact. No, 3 ideas. Great stuff. Thank you, Caitlin and Beverly. We'll take a look at those. The slope, yes, agree. I do agree with that. The only thing is that I find it a bit difficult always to really look at angles. I mean, it's possible, and in some cases it's very clear. Then again, it's not something that maybe can get a bit confusing. So I agree with you. I just think that it's more of a confirmation, an extra. Let's take a look at, that's angle / slope. Spacing, the second idea from Beverly, and that's the one I think that's most useful. I agree with the angle, but the spacing is actually easiest to see because when candles are not touching the EMA, it's pretty simple to see it. So that happened in the second case, it didn't happen in the first case. The third idea is the fractal break. Actually, we did have a fractal break here too, when you consider this fractal here. And so we did break with this one, and we broke with this one. So both broke, in fact. If you would say, maybe a bit precise with details, but if you would say a fractal that is outside of the band, then there is a difference because this fractal was not outside of the band. This one was. So when this pushed above the fractal outside of the band, there is a difference. So fractal out of the band, yes, and spacing and angle, all of these are good ideas. In fact, I think spacing is the easiest to see. So anyhow, those are 3 ideas. So yeah, that's the difference between that and that. In both cases, in general, you can see a retest of the tunnel area multiple times. Here's once, here's twice. In fact, still, here's 3. When do you know really that the tunnel is broken? When the band is pushed below the tunnel, and it never really happened here. So you can get multiple challenges, really. That's the difference between scenario 1 here, 2, and 3. Basically, here's the trend continuation, here's the reversal, and the first one is, it's basically a bounce and retracement continuation for more downside and then upside. All right, let's take a look at a different example. Bit further in the past, not too far, a week before that only. Again, tunnel in play, price gets back to that tunnel, acts as resistance. When we have two bearish candles, typically I look for two bearish candles in a row, like here. Let's take a look at how that looked like here. Here you had two bullish candles right there. How about bullish candles here? We didn't have two in a row until here. That would have been a bit late entry there. All right. But as I said, I don't always trade it. It's just to show when the moments happen. So anyhow, got the rejection. But what happens? Band again acts as support. Pushes it higher. We get again squeeze. Second time the band is used. The third time the band is used. Every time price does make that dip, 1, 2, 3, but it just doesn't have steam to continue. And it actually then finally pushes, actually even a fourth time, but this time it really goes far above it, doesn't it? We get the consolidation where the moving averages are flat, and then ultimately the reversal. Big process. You can see it takes time. In many cases, it's a big process, and we get the trend reversal. And in this case now, we're in the breakout mode to the upside. So the tunnel trades, what kind of tunnel trades are possible when looking at this piece of price action, right? Well, certainly the first time and the second time are good potentials for shorts. When you get really a lot of these touches in a row, you can still look for shorts. It's just that it's going to be weaker. It's going to be weaker. Then ultimately, eventually, if it does something like this and it's trying to reverse like that, then the breakout to the opposite direction like that. So reversal trades at the tunnel, I'm looking at candlestick patterns, as I already said, two candles in the opposite direction. So if price is going back up to the tunnel, I would be looking for two bearish candles. If price is going back down to the tunnel, I would be looking for two bullish candles. If we get the reversal, I would be typically looking for the fractal break as a confirmation. Now, if we get here, for instance, right, we get the bounce, right? So here we had bearish bounces, and here we have a bullish bounce, don't we? For whatever reason, if that trade is gone, is for profit, is already closed, and I want to re-enter, options for re-entering with the trend are, again, fractal break or in the moving averages band. So basically, tunnel trade, tunnel trade, tunnel trade, tunnel trade. Here we have fractal. Here we have basically with tunnel trade with the trend, I'll say TT. Here we have tunnel trade reversal. Here we have tunnel trade reversal. Here we have tunnel trade with the trend. Oh. All right, but each in different directions. This is bearish, the green is bullish. Alrighty, and the blue zone, in fact, is not really anymore a tunnel trade. It's actually a band trade because we're using the band, and it's a band trend continuation. So it's a bit different. I want to focus on the tunnel today. So anytime price gets to the tunnel, it's potential bounce or break spot. Alrighty. Now we could go back in the past and look at all these situations, and you would see, we can look at a lot of examples. But as I said, the best really is still, I think, to use it in context with the overall market and use it as a tool to look for potential trades or just to analyze the market. There's nothing wrong with backtesting, going in the past and seeing how the tunnel works in all these cases. Of course, you cannot get back that historical kind of moment feeling, sentiment of longer time frames, perhaps news that was going on at that moment. Those things you cannot relive. So it's still very useful to backtest. It's just that's only the limiting factor. But you can see that there's a lot of moments the price goes back to these tunnels, and it's often a kind of an interesting zone. All right, so let's take a look at today's market. Now that does not have to necessarily be on an hourly chart. It could be a 4-hour chart as well, right? So it could be a daily chart. And look at that, price has already hit the tunnel. Once here, twice here. This is actually not, well, I don't know, maybe the third time. It's just, maybe this is just one hit in general. All right, so far shorts, shorts here and here and even here, not doing that bad, as you can see. So daily tunnel, 4-hour tunnel, but 4-hour in fact is now, price is pushing through it. Didn't get really any rebound as yet, so I think we'll get some rebound at one point to go back to that tunnel, because we're still actually pushed through the first time here. And an hourly chart, or the 30-minute chart at least, there is a bit of divergence between these bottoms. So there's chance for price to get back to that tunnel on the euro dollar. The 30-minute tunnel, for instance, right here. All right, so that could be an interesting zone to look for. Shorts. Anywhere price gets into the tunnel here. Could be interesting short zones. Just looking at the tunnel. Now on a 50-minute chart, you can see that the tunnel is lower, right? Obviously, the higher the time frame, the tunnel is going to be at different spots. So you see these pink lines indicate where the tunnels are for 15-minute chart. That's here. 30-minute chart, and even the 60-minute chart. And what we'll typically see is this going on. So something like that could happen. So from this point of view, there could be scalping trades on the from the 15-minute band, but perhaps only down to here. I wouldn't expect too much, because ultimately I would at least expect price to get up to the second band here, this one, where I have the green circle. Because what I'm looking at is, where's the divergence on the chart? Well, the 1 hour doesn't really have it, in fact. It doesn't. The 30-minute does. So that's where I ultimately expect the price to go to. So here is just a stalling spot, the first one. The second one could be the bigger bouncing spot. All right, but each of these tunnels provide opportunities for bouncing spots. Now, one thing could be to look for price action at the tunnel on that time frame. But sometimes I lower the time frame by one time frame and look for price action at the tunnel on a lower time frame. All right, so let me show you an example. We showed an example on the Aussie yesterday, in fact. Aussie was on the 50-minute tunnel yesterday, in fact, right here. Remember yesterday I was saying that could be a rejection spot? I'm not sure if anyone remembered. It was the L3 as well. And one of the reasons was the tunnel. And that was right here, actually. Yesterday we were looking at it. All right, so look at this bounce at the tunnel. Now, one way is just looking at the 15-minute tunnel and using the 15-minute tunnel, all right, as the way of looking at it. Two bearish candles would be an entry right here, in fact. Stop loss just above the high, or maybe, depending on which time frame you want, give maybe a bit more space above that, not maybe right above it, and you get this fall. Now, typically, if I want to use a very tight trailing stop loss, I'm going to use two candles back system, two candles back trail stop, which means that I look back the second candle from the second, how do I say it? The two candles, the second closed candle in the past. So let's say I enter here and I get another bearish candle and another bearish candle. So let's say here, this moment, I want to trail stop it. Well, then this candle just closed. The second candle back is this one. We got two. This is the first, this is the second. So that means that I can put the stop loss above that high. And as we go along, obviously in this case, this is a good case. You got, let's say that this candle closed right here. No, here. The second candle back is actually a candle lower. Well, in that case, I just keep the stop loss at the original spot because I'm not going to, you can't move it below price, right? So it wouldn't make sense. So just keep it there in that case. So as we go along, you can see that eventually the trail, in this case, gets kicked out maybe here. Well, I don't typically go 1 pip above it. I go a few pips above it. So most likely it catches all of this piece here to about, here's the exit. So that's a nice trail. In this case, about 80 pips. All right. Now, so that's a nice example, right? But it's not always that nice. If a looser trail, I want to use a looser trail, I would use fractals instead. On this time frame. If I really want to use a very, very loose trail, I would even go to a 4-hour fractal. Still be in that trade, or 1 hour fractal. Still be in that trade, right? Depends. But so that can vary. Now, the 50-minute fractal, so the 50-minute bounce could be done on a 50-minute chart. It could be also done on a 5-minute chart, getting a bit more riskier, one time frame lower, right? Let's go back to that moment. Two bearish candles is here, in fact. So a bit better entry, but really not that much of a difference. And but the exit could have been earlier. If the same trail would have been used, the exit would have been here for about 40 pips. It's more. It's obviously less because it's a lower time frame. And you bump into a small little retracement here. The other method could be just to use the band as a trail and use the fractals that are at the band for trail. And then somewhere here would be the exit. So that's an example of a 50-minute chart. So, that could be kind of the idea. Now in this case, you can see the band and the tunnel are on top of each other. So when price moves down here, I'm not looking for this as support, all right? No, because there's no spaces yet. When the moving averages are on top of each other like that, it's a range. And in that case, the tunnel is not something necessarily that is very interesting for me. All right, so let's see. After you get the two bearish or bullish candles at the tunnel, do you enter off the top or bottom of the second candle? Do you enter off the top or bottom of the second candle? I'm not sure what you mean, but there's nothing wrong with the market order right there. But because I use it in the discretionary method, it's not always like that. But let's say that's the rule of thumb, the average rule that I do. Yeah, do wait for the candle close. And basically just a market order right at the close of the second candle. You can play around with that. Nothing wrong with waiting for a bit of retracement after those two candles. But I mean, if you really dive into, eventually you might get yourself too much into details. Or a break, if you have two bearish candles, the break of the candle low is possible too. But I don't know, and this maybe, especially on a lower time frame, could get too complex maybe. Maybe on a higher time frame, possible then. Yeah, that's possible. If you have a bit of doubts, you can wait for the candle top or the candle high or low to break. There's nothing wrong with that in most cases. So, I mean, yeah, so basically, really, the tunnel method can be used for all types of trading. You can scan the markets for setups at the tunnel, at various time frames, really. We had an Aussie tunnel approach. Here, we hit the tunnel. We didn't have two candles. Here, finally, we had a couple of candles. But look at that. When you get a sideways move like that, what does that tell you right here? Oh. And no clear break above the band. And the band is then eventually on the tunnel. Well, it's telling you that the bounce is weak. So obviously, an exit at some point or another, a market exit, a trail exit, to get out, a break even or a small profit is desirable when this happens. Even if it would spike above, fine, let it spike above. I mean, there's always another way of catching it. And in this case, breaks through the fractals here, and what does it do? It makes that reversal. That was this week, in fact, on the Aussie. So let's scan the charts. Let's scan the charts for some more examples. See if we can find something. Aussie 5-minute chart, almost went there. Didn't get there quite yet. Nothing on the Aussie at the moment, right? But maybe for the yen it's different. Let's take a look at the yen. Sorry, it seems a bit slow suddenly. But you can see the dollar yen tunnel hasn't been reached for a while. So yeah, there is that potential for the dollar yen to go back to the tunnel, in my opinion. We're below the band, and there's definitely the potential for price to make that move. So that could be interesting. Daily, we're at the tunnel. Look at that. We had a move back to the tunnel first time, right here. And we had a bounce, but eventually it's now in a triangle. So what would be the breakout for a reversal? You maybe already know the answer, right? Probably this fractal. I mean, it already actually broke this fractal. So I am already leaning towards the bearish break here, in fact. But another breakout could be good. Break through this fractal could mean the bearish breakout here and a reversal on the dollar yen, in fact, because we already had to move back to the tunnel. We had a bounce. We didn't go anywhere so far. That could be it. Now, if it breaks above these fractals, we could have space. We could get space between moving averages. Price could go above the band, then go back to the band and use it as support. And that could happen as well. Ultimately, then, therefore, these support and resistances are critical. Critical situation on the daily. 4-hour chart. Do we have any tunnel trades at the moment? Nope. Well, we had one here and we had one here. Nothing now. 1-hour chart. Nothing now either because it's a range. Tunnel, it's, if you see a range like this, the tunnel is not going to be the same value ultimately if price does respect it here, you might find a trade or two, but you especially want to be careful in zones like this, right here, because you can get a bit of a whipsaws there. But even in ranges like this, you see kind of the price respecting those long terms. But anyhow, price is getting back to the long term again on an hourly chart right now. So perhaps on a 50-minute chart, that could be, a resistance spot. But as I said, I used the discretionary method. So I typically want to check if that makes sense. Is that a trade I like? Well, yesterday I did like it, remember, the dollar yen here. I like this short because of the breakout. From a wave perspective, it was actually a wave trade, to be honest, Elliott wave trade. But we didn't get the big continuation. I had a short here. I used my 2 candle rule and I got out for a very small profit there. And that made sense because the moving averages were not aligned, so we did get to hook back here. And so from that point of view, it could still be a hook back for more downside, so it could make sense. Still might make sense to look for shorts, but obviously the bigger environment is still quite rangy. So from that point of view, maybe hourly candle is better than a 50-minute candle, because 15 could give a false signal here. Alrighty, let's take a look at the pound. This is the 5-minute band. Hit the 5-minute band, 2 candles is here. Already fell 47 pips in the meantime. And that's probably the only tunnel it's going to hit because it's trending down. So, well, that means we're not going to see a tunnel hit at this moment. We'll need to make a retracement first. We can see some past examples again, here, and perhaps here. One of the reasons also that overall the long term looks bearish. Daily is more of a consolidation still. Remember we talked about here, break below, hook back. So this fractal is important. Looks like we're breaking through that. No divergence on these time frames. Only on the 15-minute world at the moment, perhaps, and it's not even confirmed as yet. Eventually, we might see price go back to the 15-minute tunnel. That could be a good shorting area again. So nothing at this moment. There was only a trade on the 5-minute chart. Let's see if there's anything else. On other time frames, we just looked at 4 currency pairs, but there are a lot of tunnels available, obviously. A lot of pairs, a lot of time frames. Not every tunnel trade is a desirable one, though, so it's always good to double check. But I mean, it is one way of filtering out a lot of things going on. If I focus on that, it's easy to monitor. Dollar CAD had a couple of tunnel trades here, as you can see, on the 4-hour chart, a choppy dough. Here, tunnel trade 2 to the downside, eventually got stopped out on a trail. Didn't get an upside tunnel trade as yet. That could be still a good one if it does get to the hourly tunnel. It's at the 50-minute tunnel potentially. And past the 5-minute as well. Is there any divergence between these time frames? That's something we need to check. And there's double divergence, which means that 30-minute world should go to the tunnel. How about the hourly? Even the hourly. So I wouldn't be looking really for 50-minute tunnels here, because ultimately this could just be a bounce with limited upside and before we get one more retracement. So I would focus probably rather on the hourly tunnel. Right there. Any questions, actually? I seem to have lost my euro yen. Let me find my euro yen. It's a simple way of trading in a way. I don't know where my euro yen is. Anyhow, I'll open a new one. Now what you can do is use Fibonacci sequences for targets. Because what I do is I count Fibonacci sequences from tunnels, in fact. That's my starting spot. So when price rejects here on the euro yen, that's actually what I use for that's actually what I use for Fibonacci sequences. So we are in, typically the third level. Once it gets below the third level, you're getting into a very nice trending mode. So 55 pips here. That's the first level I used. Then 89 is the second. From 1 hour chart higher, I use 55 as the first level. So when you get below 144 here, that's where you really get a beautiful kind of trending environment. Great fall in the euro yen. Continuation here. And it's probably still space left to that fifth level. Actually, yesterday I skipped a euro yen and focused on the dollar yen. It was a pity I did that. I was a bit beating myself up for that. But ultimately, one of the reasons, let me see where it was. Well, it wasn't at the tunnel, in fact. Yeah, that was a different kind of rule. Yesterday we were looking at the fact that if price is away from the wave for more than 10 candles, the band itself becomes a support and resistance. So that's a band trade. All right, here too, looking for basically price to show some price action candles there on the same or lower time frame. So I was thinking about shorting it here and then I guess checking out at the end. But yeah, it did break this bottom by a bit, as I said. It was a pity I didn't take it, so I was a bit disappointed by that. But okay, got the break, got the pullback indeed, and yeah, I should have stick to my rules. But yeah, when you get 20 like this, it typically is a very strong moment. Actually, here we had almost 10 again. Just missed it, but 10 is just a rule of thumb. But anyhow, it was close to it. Again here, resistance. How about this move down? How many candles? Well, this is the band trade again. Again, more than 10. Wave here, this band is resistance. Now, we don't get any gap, do we, here? Price goes actually above it. Still pushes below it, but it becomes choppier, as you can see. Now, the rule is not ironclad, because I think here probably we do have more than 10. Yeah, and the resistance is not there. But in the meantime, we do have about double divergence, so that's something we should also consider. Yes, the 10 rule gap from the band is important, but if we have double divergence, we know that it should go back to the tunnel. Fatal, no, that's not true. The only thing you turn into is a rule breaker. Malcolm, pound dollar, yeah, definitely we can take a look at that. No, but anyhow, that's just what happened yesterday. So you can see, let me see, we had the break of the third Fibonacci sequence level here, which means I think I was looking for shorts yesterday somewhere in here. All right, so let me go back to the 5-minute chart. Now we know where that third sequence level broke. Somewhere in here, so you can see it just broke the third sequence level. It was halfway still to the fourth and made a pullback to the band with a lot of distance here. It was actually a great short down to the fourth level. It's a bit, I know, that's always easy to say in retrospect sometimes. Obviously, things are a bit easier to analyze if you're looking at higher time frames. There's just simply more time. One of the disadvantages. But anyhow, let's take a look at the pound USD. Oh, there's my euro yen. I don't know why I didn't see it the first time. Now I have 2 euro yens. Anyhow, Pound USD. So if I would be in this short, if I would be trail stopping it, now always difficult to say what I would do in retrospect. It's a bit easier to say so, but let's say I would just use it, the tight trail stop. Then at the moment, my stop loss would be above this candle. And I would be locking in that much, but maybe only 5 pips in fact. So it would be 50 if because it went down a lot more. But that's the rule of the tight trail stop in any case. So at this moment, Malcolm, basically there is no tunnel trade on the pound USD, in my opinion, unless price gets up to the 15-minute tunnel here. Or maybe even back to the 5-minute tunnel. Could also be even enough. 5 and 15 at the moment. I don't think I would be trading anything else really. Not here, personally. And one of the reasons is, why would I not be trading it here? Does anyone know the answer? And it has to do with the band. Any guesses? I'll give you a clue. It has to do with the band. Yeah, well, first thing actually is I'm not a big fan of trading pound dollar that early because it likes to go up and down, spiky thing. But that's maybe a different story. If you just look at the band, yeah, there's no spacing with price. There's no space at all. It was here in the Asian session logically right at it. It just broke below it. What I would like to see is actually on a 5-minute chart. 15, like a good break away from it, 10 candles, and then a hook back to the band, then it could be a good pullback trade. Now, we just had a spike below it. I would not use the band as a resistance spot at this point, at least. Now, that would have been different here when the chart looks like maybe, let's see, it didn't have very good breaks. But here, at least, we had 8 candles. It's better. It's a bit better. Here we had 9 and no divergence. Here we're having divergence and so far 1 candle. So that's the difference, I guess. The tunnel trade was better, I think. Well, yeah, that's just my 2 cents. Let's take a look at Kiwi. Any tunnel trades? I hope we can find a tunnel trade. Let me just quickly scan various charts. 5-minute chart had one. But there's 15-minute divergence. So the better one is the 15. Eventually could even go up to the 1-hour tunnel, to be honest. But probably the 30-minute here would be a good one. You can see that really we had already, yesterday we had some moves away, so we don't see many at this point. Let's see, pound yen. Euro odd has a tunnel trade on the hourly, so we can focus on that. Pound odd had it on the 4-hour chart. Had it on the hourly. So let's take a look at the euro odd then. has it on the 4-hour chart. It's a very choppy move. You got to be careful sometimes. I mean, price can become choppy at the band. Sometimes you get strong reactions. Sometimes you get a lot of choppiness. Something to be very cautious of, because and that choppiness can happen just because of the squeeze that's occurring. One of the risks when tunnel trading, in fact. So what is going on here? Let's see. We got actually first bullish candle, but no space as yet. Bullish candle above the band, I mean. So it's not a band trade. Tunnel trades, we had plenty, but as I said, I like the first one or two, but we already had 1, 2, 3, 4, 5, 6, 7 of them, which when you get into those kind of levels, it's not a tunnel trade anymore, it's some kind of range trade. I would consider the first two tunnel trades. At this moment, it's not a tunnel trade anymore. Now, so what is remaining? It's either, in my opinion, on a 4-hour chart, a potential breakout below, but watch out, I want a good candle close below it to signal that, to avoid a wick like this. That would be the downside potential. The upside potential would be, in fact, waiting for price to really, on a 4-hour chart, be able to make a gap between the band and price. We'll then wait for the pullback and probably take the pullback in the band for long. Or the breakout. Not really ready at the moment. We can use the sequence levels right here. 1, 2, 3. We hit the fourth. So probably the best breakout trade to the upside is going to be in here, between 5 and 6. We take a look at the hourly. Hourly, actually, we're at the tunnel to the downside already. We're actually hooking back. Second time to the tunnel. This is the first. This is the second. Had some wicks here. You know, it depends. The 2-candle rule is good. Sometimes if you really get a lot of wicks like this, 2 wicks like that, it could be good enough already. Yeah, Derek, I think it's that it sounds like she's hungry indeed. I think it's more that she wants attention. She's like, what are you doing behind that PC? So yeah, there would have been potential shorts, but is it desirable trade? I don't know. You got a strong band already pointing up. I think it's a bit doubtful, really. In my opinion. All right, so now I wouldn't consider using this tunnel as a support level yet, personally. Let's see. Really, even for a 1-hour trade, the fractal is the important one for the reversal, remember? So that fractal there. And this fractal for downside here. I don't know, I don't see any trades at the moment, personally. Not now. Even this breakout, I think it could be a good push, but I don't think it has a lot to go. If it breaks above here, it can go up to this level. Then probably pull back. So there's some pips there, and then go up like that. But the second trade here looks better than this first one to the upside. So that's how you can piece together kind of these informations here. I mean, so yeah, your odd is at the tunnel, but doesn't look to be interesting at the moment. Let's see if anything else is. Does anyone see some pair that is interesting? Maybe you're scanning the tunnels too, perhaps. Let's see. Here New Zealand is at the tunnel. (30-minute 2). Depending on how you look at it, we had some good wicks here. 2 bearish candles in a row would be here. The candlestick pattern perhaps already here somewhere. And had a trade could be even taken now. I'm really not, I mean, it's possible, and use a tight trail on the 30-minute candles. And as soon as it starts to move, I mean, quickly move to break even. It's possible. Let's take a look at the 5-minute chart. See here, actually, the 5-minute chart giving a bit of contradictory signal here. It's a bullish bounce. You can use it by time fracture rule as well. If you don't get 2 bullish candles, if you get 1, 2, 3, 4, 5 candles not breaking this bottom, that could be a bouncing spot too. So you get a 5-minute bullish bounce right at the tunnel here. But this downside right here was actually a 30-minute tunnel bounce. I don't know. I'm still going to move on and see if I can find something more interesting. Pound Swiss looks like it's trying to push through the tunnel. It's at the 5-minute tunnel. It's at the 5th, or it was at the 15. Pound is really making a serious retracement. And the 1-hour chart actually was breaking through this fractal, which could signal the reversal as the band crosses the tunnel. So it could be interesting to keep on a 5-minute chart. If it shows a turnaround here, I might be interested in a bearish trade. If it shows 5-minute reversal here, for instance, 2 candles bearish. But you know, it's 50-minute chart. Let's see. Yeah, that could be, for instance, here, that spot at the pivot, for instance. Pound is moving up a lot at the moment. Somehow, let's take a look. As I said, it's a lot of spikiness. With the pound. Yeah, moved up a bit. So let's take a look at other pairs. The dollar CAD. We did take a look, and at the moment, dollar CAD is, I'm looking for actually a move down to this hourly time. There's divergence, so at the moment, price is not at a tunnel that's interesting, except it's not at a tunnel that you know is showing a good trade. If it does move to this tunnel, it could be interesting for a bullish bounce. And so on and so on. We can look at all these exotics as well, and the CAD Swiss is flat. EuroCAD is at the tunnel, so that could be a bullish bounce 4-hour chart, perhaps. Something to keep an eye on. Bullish price potential on the Euro CAD. It's at the 4-hour chart. One bullish candle so far, so not enough confirmation there, I think. Yeah, so not a lot of options at the moment, but obviously, things can change quickly throughout the day. A lot of pairs, a lot of different time frames. So those things can go quickly. Pound yen is actually at a spot where the moving averages are intertwined. So if we break below this fractal, which we are doing, we could be seeing a bigger retracement on the pound yen. We could actually, like all these yen pairs, start to correct down to the weekly tunnel and use the band as resistance. And a break below this level could indicate that. So we might be in a reversal trade on the daily. Now we have divergence on the 30, 50-minute chart, so we could see a retracement up to here, back to the band on the 4-hour chart. And that would make sense because we know that when it just breaks away from the correction, there is a chance it will pull back to it. So if it does move up to here, we broke this key daily level, it could be a break, pullback, and fall. And because we broke the daily level, a fall from here could be a very interesting fall. So eventually, that short from there could be something that seems very interesting to me. Stop loss is a bit of a problem because above this top would be tremendous stop loss. Let me put a fib from here to here. It will be equal to the 50 fib too. I will probably go with a stop loss. Well, if I use a pending order, I guess above the 61.8 fib could be enough. I mean, it's a very tight one, obviously. Better could maybe be to wait for the candlestick reversal here. Then the top is more secure. The 50 to 61.8, even the 78.6 fib, all of these are resistance levels in confluence with the tunnel. Already. So that's my view on the pound yen. I think it's an interesting one. Let me take a look at the euro yen again. Let me add the Fibonacci sequence. Now in this case, I would use this top. I mean, it is the closest kind of fractal at the tunnel. So let's see, 1, 2, 3, 4, hit the 5th level. Let me take off this fib so you can see that a bit better. Right? The 3rd one, often you get the bigger push. Down to 4, down to 5. So from that point of view, when now we've reached the 5, you do get a bounce normally at 5. You normally do go back to 4 or 3, another confluence point, and you can see that fall down to 6. And eventually, perhaps, I mean, if we look at further, even down to 7. I don't know, maybe I'm too over optimistic here about how many pips can be made to the downside. But that's what it looks like at the moment to me. So that could be, yeah, a very big trade actually, 450. Let me take a look at the pound yen, euro yen. Well, yeah, the euro yen is trying to reverse probably too. I mean, the band and the tunnel have been on each other for very long. We're at the weekly tunnel, but we're not getting a good bounce away from the band here. So kind of like failures in a way. We're at the tunnel again. So it does look, but still, this break still looks bearish to me. But same like the euro yen probably. Let's see. We need a retracement back to the tunnel on the lower time frame, I think. The 15-minute world could even be enough. Probably the 30-minute is a bit better. This is the 15-minute tunnel. This is the 30. 30 looks a bit more secure, probably, with regard to a short. Dollar yen 1 hour chart still showing the bullish bounce here. And bullish price action. Alrighty, folks. Any questions regarding the tunnel or the band or a combination of those? In the meantime, let me pull over the webinars. Tonight, Dennet is going to take a look at the leverage and risk. Tomorrow, we're going to take a look at the entries. So those are the webinars with Nenet and myself at Admiral Markets. So join us then if you're interested in seeing Nenet and I in another webinar today. We are going to have one today and tomorrow. Just write me an email. You can send you the link how to join. And otherwise, if not, no problem. You can join hopefully tonight. And it's going to take a look at over leverage and leverage in general, and maybe risk, I think. Not sure. Let me check. There's my email. So yeah, great. Everyone says it's clear. That's good. If you have any questions, you can always use that email address to ask me questions as well, or any of the webinars, obviously. Here it is, leverage over leverage and position size calculation. And tomorrow, step by step to looking at entries. Ultimately, I think tunnel trading is a nice way. It's a clear moment when price gets there. I think it's a simple method. It shows patience and good retracement levels sometimes. So I think it's an interesting way of tackling the market. I like it, and I like the combination with the band. So, but if you have any questions at any point, use my email. And in the meantime, hope that you catch many green pips, as Ned says, and wish you good trading and a good day. And I'll see you soon. Cheers.